The story on A shares for us, from a strategic standpoint, is that there are very clear indications that policymakers in China want to promote the development of the domestic capital markets. I was actually in Beijing about 3 weeks ago, meeting with policymakers, including the CSRC, and the continuing message there, and I've seen them periodically over the past couple of decades, is a desire to develop domestic capital markets, not, to be frank, from any sort of altruistic perspective of thinking what shareholders should be treated, et cetera, but from very clear self-interested reasons. I'll just enumerate a few of them if I could. Number one, if you want to develop your domestic technology base, you need capital markets to do that, right? And obviously with technology constraints, imports being constrained, there's more of an onus on developing technology domestically. Number two, if you want to encourage people to spend more, which is clearly the way the economy needs to rebalance, you need to develop domestic consumption. To do that, you need a better social safety net, given the legacy effects of the one-child system, which means you need your pension and insurance industries to develop, which means you need capital markets. And I could go on, but you get the drift, right?
But I absolutely get the drift, and this is sort of what I've been seeing as far as a trend is concerned. What do you think is happening over in Beijing, given your conversations with, Wu Qing, the broker butcher, et al., about the stock market and the role of the capital markets in China now, given what we've seen over the last 3 years or so, that China needs a functioning stock market now to really support its domestic industry. I mean, you've got this semiconductor chip expo happening in Beijing just this week, and all the conversation that I'm hearing from there is that, we've got to build this stuff out really quickly. We've got to just pour more capital into this. And so, is there an opportunity in the chip space there as well?
Yeah, well, we do think there is an opportunity. China clearly has to lean into this, and it's the very clearly signaled desired outcome. So in that whole so-called legacy node area, China has the capability. The higher-end technology constraints on Chinese imports of U.S. or U.S.-related goods will not as significantly affect that area. So we're seeing greater competition. In fact, that one of the reasons why we have a more nuanced view in the tech cycle as a whole is that there's greater competition coming in those legacy nodes, which will suppress DRAM and NAND pricing, and that's why we're leaning into AI as one of the key tech areas. But to stay on point with the A-share theme, it's very clear that what the authorities want is, and they've used this term in our conversations, is so-called patient capital. In other words, they don't want a repeat of 2015. We had a boom bust, and basically everyone, a lot of people lost money because they bought in too high, and then the market crashes. You had a liquidity compression, and they don't want that. That's bad for business. What they want is sort of good, steady, call it maybe 15% per year, appreciation slope. If I could make one other point here, which I think is critical. Just in the last several weeks, 100 A-share companies have taken down financing, which the PBOC wanted to devote to the equity market, starting from the September 24th press conference, to buy back stock. So you've had 100 A-share companies buying back stock, and if you look at the time series of share buybacks and dividend payments in the A-share market, we're at all-time highs just 10.5 months into the year. So I think there's a very clear focus on returning cash to shareholders. And by the way, the last point I just want to make here is that this again is in the self-interest of the authorities. We have to remember that SASAC, the State Asset Supervisory and Asset Commission, owns half of the A-share market. So when you increase dividends and stock buybacks, the state gets half of that, which goes a long way to filling the hole from foregone property sales that local governments can't make. So there's a very clear logic here as to how the domestic equity market plays a role in terms of advancing the larger strategic ambitions of the government.
And the thing is, I mean, handing back more money to shareholders, right? That has a sort of a social security angle, social safety net angle to it as well, right? Linked to growing demographics. I get that.